Good morning, everybody. It's Friday, July 21st, 5:30 a.m. Central Time. We've got a little bit of back and fill in the grain markets here this morning. Everything's a little bit lower. Brian Split, good morning. Mackenzie, good morning. Why don't we start off with the Drought Monitor, guys? We had a new one out yesterday.
So, significant rainfall across Michigan, Ohio, and Indiana led to improved drought conditions this week. Southern Missouri saw conditions improve. However, drought conditions continue to plague the remainder of the state. Drought conditions, for the most part, remain the same throughout Iowa, Nebraska, and Kansas over the last 7 days. Conditions are expected to worsen in the coming week with little to no rainfall and temperatures above normal. So, when we look at the percentage of U.S. areas experiencing drought, 55% of corn country, soybeans 50%, winter wheat 50%, spring wheat 31%, and cattle country 37%.
Those numbers have come down for corn and soybeans in particular. Now, I would make the argument we've done the 2012 comparison again. We'll do it again today. 2012 looks substantially worse than 2023 does today. 2012, it was much more widespread and much more intense now in like the central part of the Corn Belt. Brian, I'll ask you this question again. You look at the drought monitor. Does this equal record corn yield to you?
No, probably not. But I guess, the other question I would ask you, Joe, is have we priced in the current forecast?
Um, we're going to get to that. Why don't we jump to that right now?
Okay, so the U.S. Corn Belt will stay dry for another week. Temperatures in the 90s arrive in the west early next week and will hit the central Corn Belt on Tuesday or Wednesday. Temperatures in excess of 100 degrees are possible across the region by Friday next week. The 10-day Euro and GFS models suggest that rain returns to the Corn Belt during the last couple days of July. The extended GFS suggests better chances again during the first few days of August.
Okay, so I'm going to title the episode of this podcast like 105 degrees in Iowa. Is that a record corn yield or something? The GFS actually says it could be as hot as 108 degrees in southern Iowa toward the end of next week. So I'm not making that up. That's probably overdoing it just a little bit. So the forecast, Brian, to answer your question, the short-term forecast is bullish because you have no rain for 7 days and you've got heat next week. The extended forecast, when you look out, say the last maybe 2 days of July into the first couple days of August, introduces some more rain. And I guess the question is like, can the corn crop in particular, can it tolerate this week to 10 days in a key period for crop development of hot and dry? And can we still achieve a record corn yield? It seems like a stretch to me. I don't know.
Yeah, but I think the trade has been trading something below the 177 and a half that
I would
we're
agree.
at anyway. So the expectation would be that yield will probably come down further. Does it just come down further to where the trade already was, which I think a lot of the market was thinking prior to the July WASD, like 172 to 175. And maybe that's where we are.
I think 175 is the number that people are working with. Maybe it's slightly lower. And we talked about this in a premium video earlier this week. I guess one of my questions is this: what if the trade's like totally wrong? What if the expectation, which is maybe it's 175, maybe it's 173, I don't know. What if the real number is 165? I mean, I think that's a possibility. I think something south of that is a possibility. I mean, we're running big time moisture deficits. We've got a nasty forecast for the next 7 to 10 days. I don't know. Am I crazy to even mention that?
No, but to counter that, after 2012, a tremendous amount of money was spent on genetics to
Yes.
tolerate drought. And so,
It's going
this
to be
is
a
going
good
to be
test
another
year.
learning experience, yeah, where we
Yeah.
really see how well these genetics perform.
If you guys are watching on YouTube, let me know. It's not too early now. It's July 21st. We should have a feel for the national corn yield, or at least what's possible. Spit your numbers out. I'll be curious to see what you guys think. Let's jump to Russia. Another night of attacks.
Yep, Russia attacked Ukraine's Odessa region for the fourth consecutive night. The Associated Press reports this morning that 2 rockets hit grain facilities in Odessa. The future of Ukrainian grain shipments from the Black Sea looks bleak amid ongoing tensions.
Brian, do you have any thoughts on this? Why did the market care the last 2 nights and not this morning? Is this just back and fill Friday exhaustion?
Yeah, I mean, the market did a lot in a pretty short period of time. We, for example, looked at KC wheat charts a couple days ago, and it's just stuck in this trading range. And every time we get news like this, it goes to the upper end of the range, like we did this week. And thus far, we continue to fail at that upper end, like we have so far this week.
Okay, so more attacks overnight, but yesterday, I think this may have been the headline that kind of rallied the wheat market.
Ukraine is now threatening ships bound for Russian ports. Any ships heading to Russian ports, according to Ukraine, are now considered military targets. The warning comes after repeated Russian attacks on Ukrainian grain storage facilities this week. Russia has said that ships bound for Ukrainian ports would be considered potential carriers of military cargo. The statement led many to believe that Russia might attack civilian ships. However, Russia insists that will not happen. The UN will meet today to discuss the humanitarian consequences of Russia's withdrawal from the Black Sea grain deal.
So Russia and Ukraine are essentially like threatening each other's shipments. Russia and Ukraine are projected to combine for 58 million metric tons of wheat exports this year. That's 27% of all global export share. So that's why the wheat market cares about this. I mean, are Russian wheat exports actually at risk, Brian, do you think?
Hard to say. I think there's been a lot of rhetoric about how Russia is impacting the food availability of the world. So if they start to attack Russian ships that may have grain on it, they're going to be potentially accused of the same. And then I think there's another angle too, where you have China recently signing a trade deal with Ukraine, and so. Uh, I tend to think that maybe that's going to keep Russia from getting too active. If they're one of their trade partners, and they do military exercises with China, so I tend to think that that might keep them from going overboard here. But who knows?
It's a lot of talk, but if you see one Russian grain vessel attacked, that's a game changer. It's an absolute game changer. And the UN and the West, I mean, they don't want that to happen because they are supposedly concerned about food security and starvation and that sort of thing and inflation and keeping prices low. I don't know. It's a wait and see. The market's going to react to the headlines, and there's going to be additional headlines here. Probably today, probably over the weekend, probably Sunday night, probably into Monday. We did have an export sales report yesterday.
Yep, U.S. corn export sales declined last week. Net corn sales of 236,800 metric tons for 2022-2023 were down 49% from the previous week, but up 6% from the prior 4-week average. Accumulated corn sales for the current marketing year are down 34% compared to the same period last year. Net soybean sales of 127,000 metric tons for 2022-2023 were up 58% from the previous week, but down 43% from the prior 4-week average. Net wheat sales of 170,700 metric tons for 2023-2024 were down 57% from the previous week.
There's nothing really good here in terms of old crop business, although there's only 5 weeks left in this old crop marketing year. New crop corn and soybean sales were actually improved drastically. 492,000 in corn. Mexico, the largest buyer there. Soybean sales 760,000, which was the best week of new crop sales that we've seen. Brian, this should be the beginning of better new crop export business this time of year.
Yeah, typically I think China would come in and start to really aggressively buy soybeans, maybe into the August September timeframe. So that time of the year is coming. But man, the deficit that we have right now is so large compared to what we did last year. So we really need to see them show up and show up big.
In terms of statistics, the deficits for new crop look like this. The new crop book of U.S. corn commitments is the 4th worst of the last 10 years. We're down 39% versus the same period last year. Soybeans are even worse, 2nd worst of the last 10 years for new crop commitments, down 65% versus the same period last year. A lot of this has to do with the absence of Chinese buying we hope that they or somebody comes back. Mackenzie, we've got 2 cattle reports. It's like Christmas for you.
It is. USDA will release their monthly cattle on feed report and the mid-year cattle inventory report today. So today's cattle on feed report is expected to show on feed numbers at 97.7% year over year. Placements are forecast at 98.1% and marketings at 95.2%. The mid-year inventory report is expected to show a record low beef cow herd. The report is anticipated to show the smallest calf crop since 2014 at about 33.6 million head. Beef cow slaughter is down 11% compared to 2022. However, compared to 2021, slaughter is up 1%. And then compared to the 5-year average, this year's beef cow slaughter is up 3%, which provides evidence that producers aren't confident enough to start retaining bred females just yet.
So overall, I mean, this confirms the idea that we're in a bullish, tight situation. 2 questions for you guys. So first one would be this, I guess, feed demand. Brian, I'll ask you this. Is USDA too high on feed demand when it comes to new crop in particular?
I think so. You look at animal units on feed, and it seems that way.
Okay, second question. Does the cattle market have to continue to rally if this report is bullish, given that we've already gone up so far? We actually had this was kind of a nasty reversal on the August live cattle chart yesterday.
Yeah, big reversal the day before report. And I think if you look at some of the other contracts like December, I'm focused on that one quite a bit. But, you have that term, buy the rumor, sell the fact, for a reason. And, with the reversal yesterday, it may just be one of those things where we've seen that before, where maybe it leads to a couple-day correction, test support, and then hopefully that support holds.
Yeah, we've had reversals. I mean, we had one, what was it, just last week or 2 weeks ago? You had one back in June, which actually did result in a correction. The feeder cattle chart, you had kind of a similar reversal yesterday, not a key reversal necessarily. Mackenzie, do you think attitudes among people in the cattle business are still as positive as ever, or are people starting to get nervous?
I think people are starting to get nervous. Sure, record high prices are great, but they've slowly climbed, but when they do come down, they're going to come down fast and they're going to come down hard. The ugly side of this is going to be much uglier than the positive side that we're experiencing currently.
Stairs up, elevator down. That'll be the case eventually. Outside markets this morning, guys. U.S. dollars up just a little bit. Stocks are up. Bonds are up fractionally. Crude oil up 87 cents. In the October WTI at 76.30. That market's been a little bit stronger. Everybody have a great weekend. Brian, Mackenzie, thank you for joining me this morning. We'll talk to you guys Monday.